Hello and welcome to the ADM Investor Services weekly market kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland. Today's panelists are Steve Freed, our VP of Grain Research, and Alan Bush, our Senior Financial Economist. Let's start with Steve. Steve, why are corn, soybean, soy meal, and soy oil futures trending lower?
I think that seasonally, there's a chance for the market to take some of the weather premium out. Next 2 weeks is going to be pretty much warm and dry across much of the Midwest. We expect that half of the corn crop will be planted by May 20th and the rest of it by June 1st. This is a big contrast to concern that we weren't going to get the crops planted. Um, we also note that outside markets are all lower. The stocks market, the dollar is higher, crude's lower, and so there's all this kind of things going on right now that um, is negative to maybe the demand with COVID lockdowns in China and maybe supply with the final crop, U.S. crop getting planted. Soybean oil is on the defense. I think there's concern about China taking veg oil, cooking oil during this COVID lockdown. And so all these things are kind of coming together here at the beginning of May.
And turning to wheat futures are trending higher. Why is that?
Again, it's weather related. I think the next 2 weeks we're going to see some stress to the hard red runner wheat crop. We continue to see rains up in North Dakota and the eastern part of Canada, and the western part of Canada prairies are dry, and Europe is turning dry. So I think the market is becoming concerned about wheat supply for this 2022-2023 campaign.
And finally, Steve, what will the USDA say this week and how will prices react?
Again, the USDA has been hard to guess because they've been so conservative so far this year. We don't see the export sales yet that would suggest that they would bring bean exports up and corn exports up. So they may do nothing, and they may still have that 1440 corn carryout and 260 bean carryout, which would be disappointing to the marketplace. As far as wheat is concerned, they could lower wheat exports and raise the carryout. It's the first 2022-2023 U.S. and world carryout estimate, which sometimes brings big market reactions. I think that the yield will be most important for the U.S. corn, soybean, and wheat crops, and then the demand estimate with expectations that maybe crops return to normal in 2022. So they could keep the carryout around 1,400 in corn and maybe 300 in beans, and a wide carryout guess from as low as 500 to as high as 900 in the wheat. So Thursday, May 12th is going to be a big day for market reaction.
Thanks, Steve. Moving over to Alan. Alan, what trading opportunities do you see in the foreign exchange futures markets?
Well, basically, the trends that are intact currently, I think, will continue. Just today, we saw the dollar index advancing to another new 20-year high. And as the Fed remains the most hawkish of all of the major central banks, that will continue to underpin the dollar index. So any breaks should be used as buying opportunities in the dollar. Also, I think the euro currency will continue to trade lower as the European Central Bank, although they are likely to raise rates, they will not keep pace with the Fed raising their key interest rates. And it looks like the Japanese yen will continue to decline as the Bank of Japan still remains very adamant that they are not going to tighten credit. In fact, they are very clear that they're going to keep their policies steady. So look for the lower in the yen, and these are trends that will probably last for quite some time.
Okay. And how high will the Fed funds rate be in this current cycle of tighter credit policies?
Okay, so right now the financial futures markets are predicting that the Fed funds rate could get as high as 3.25, and I think that will probably happen sometime in the third quarter of next year. So it looks like 3.25 will be the top of the Fed funds rate. At least that's what the predictions are currently.
Okay, and last question, Alan. What is the significance of the 30-year Treasury bond futures ignoring bullish news?
So anytime a market does not advance on bullish news, it could be construed as a sign of weakness. And I think that is very much the case in the 30-year Treasury bond futures, probably across the yield curve, but mostly at the long end of the curve. So with the central banks, at least most central banks, raising rates, any rallies should be used as selling opportunities, especially for the long end of the curve. So for a variety of reasons, it looks like the 30-year Treasury bond futures will continue to decline.
Thank you both on these very important market trends. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, please visit admis.com. Thank you.